Here's something that everybody who is in the stock market or trading should learn how to do. They should learn how to take pain. Because, look at this. If you can't run 20 km, if you can't push yourself to the next extra rep in the bench press or the squat, how are you going to survive your portfolio drawdown? You can't. So the trick to this is just to take the pain. You sit in the pain, you simmer, you marinate in it, and then when the market recovers, everything will be fine. Just make sure that you're investing in good stocks, good high quality stocks with good moat, good forward PE, good discounted cash flow. Make sure you do your due diligence and then sit in that pain, because volatility is the name of the game, man, especially in Trump's market. So now, if you were thinking of traveling to Australia, previously you wanted to travel to Japan because that's when the yen was depressed. Right now, Ueda is doing rate hikes, so Japan is not going to be as cheap for traveling if you're a Singaporean. Australia is actually pretty good because they saw a stock market pullback, a lot of pensioners, and they have a lot of people losing their shit over here. It's a good opportunity to travel to Australia actually. Speaking of, if you want to buy some travel insurance, the link in bio here, or the link over here, I offer MSIG, Alliance and FWD insurance. Basically, travel insurance is about $13 minimum in terms of premium. But if you spend $80 in premium, it's a guaranteed, if you're the first 200 to click on this link, you get a free air tag. So yeah, basically you'll recoup your cost of the air tag, because the air tag is almost $100, right? And if you're only spending $80 in premium, you get an air tag to put in your luggage or what so and forth. I have no idea what I'm saying, but yeah, basically if you want to buy some travel insurance, support the channel, click the link here. I talked about it earlier today, but I'm actually still in my TLT positions. I've updated accordingly in the last few days on YouTube as well. I suffered that drawdown when it went to 84, but I believe that was just a very exaggerated sell-off. That's also when Ethereum went to 1490. I went long there. Unfortunately, I closed it too early, but I'm holding the majority of my core portfolio, which is inside TLT. So I still am long treasuries. The short end of the curve, actually, the yields went up today. So that actually made short-term borrowing more expensive. But the long end of the curve, which is what I'm buying into, which is TLT, 20-year treasuries or 30-year treasuries, even 10-year treasuries still went down. So the yield for longer-term borrowing went down. It means the cost of borrowing long-term, if you're buying a mortgage for 20, 30 years, actually went down. Over here, we have a dead kangaroo. I'm going to cross the road and let you guys see it. Basically, this is what happens if you get killed by the kangaroo market. Okay, it smells, it's rancid. Okay, let's walk further. Damn. But basically, in this kind of market where it's so volatile, you should expect rates to move as such and yields to move as such. So it's also taking the volatility and as I said earlier, why I'm into bonds is because I feel like it's a more stable and clear. It's a clear directional narrative trade. It's like why I went to Baba and Chinese equities during that whole Middle East crisis, May 2024. That's why I went to $300,000 I put into Chinese equities. I shared that video before. Right now, my thesis is still long bonds. And you know, as much as people want to shit on me for that, I put my money where my mouth is. I'm still long bonds. It has not gone up that much, okay? I'm currently basically at my entry only. I bought them at 88, 89. In this drop, it went to 84. But because I sold some calls on it, I managed to lower my entry to 87. I also sold puts at the bottom, so if I get a sign, I'm kind of screwed. I need to re-inject more money inside, which is something I have never done. I've never put more money there into my core portfolio actually. I treat my core and satellite portfolio differently. So my core portfolio, I just let it grow, right? But for my satellite portfolio, which is probably my derivatives tradings, my crypto trading or my CFDs, I generally just degenerate with it. So yes, so far this year, my satellite portfolio has been outperforming my core portfolio. My core portfolio is pretty stable. It's basically at 5% this year. It's not been up much because I'm mostly in bonds. I'm in some Chinese stock and I bought some US stock as well in this recent drop. So yeah, I think what we should be looking at right now is yields dropping. I do think long-term yields will drop. I know people like Peter Schiff is saying that, you know, yields will go up. But I strongly don't believe so because they need to devalue the debt. The debt is just going to get out of hand. So yeah, we'll see in a few months, okay, whether I'm right or wrong. If I'm wrong, I'm wrong. what I want to say about Trump's market is that it really gave a lot of young people like myself the opportunity to get into cheap stocks. You know, like I said, you have to choose them properly, but when else do you see depressed prices? Even in the China equities market, you get to get them at 9 PE ratio, 8 PE ratio. In hindsight, in the future, when you look back at this is a generational entry. We hit our 200 MA, we dropped 20% on the US stock market. Bonds did a huge sell-off, you know, where people were dumping US treasuries. This kind of volatility is what makes a trader successful, because you need a kangaroo market, you know, like the kangaroos all around me. I'm literally in Kangaroo Island. This is how you trade. You are able to get in at proper discounted panic prices, and then you are able to run that run up back up. So comparatively to Biden's market, it was just a backdoor funding program. They just keep having backstops, and the market just kept going up because of the 0 DTE. They keep refilling the Treasury General Account, the TGA, and that's why we never really saw any significant dip during his term. What Trump is doing is actually good for the longer term of the US economy, I believe, because it's bad for every other country. He's taking advantage of them again. He's trying to go and strengthen the dollar after this, I assume. That's also why you see that he he needs to strengthen the dollar but also devalue the debt. So it's a very fine line that he's playing. But anyway, I'm still got another 10 km to go. I ran 20 km so far today. If you like this sort of content, as always, remember, like, share, subscribe. See you guys in the next one. Bye.